All right, what's up? It's Ruben from TG. And in this video, I want to give you 10 option trading tips to want to give you more conviction, clarity, and to not be guessing when you're option trading. All right. And this is what has helped me have a wonderful year in my overall portfolio. It's been a wonderful year. All right. I'm up 50% year to date, and I'm beating in performance, I'm beating the S&P 500. The S&P 500 is up 5% and for the year, and I'm up 50%. All right. Um, solid year. Okay. And so I want to give you this advice, this tips, so you can get similar results. All right. And before I do that, I actually want to share with you the wins of the day. I didn't put them in my community as I usually do, but SMCI, it's a monster of a stock. Actually, I'm going to take a screenshot of it right now so you can see what I'm seeing here. And I'm constantly viewing the screen. So if you see my eyes rolling, it's because I'm seeing so many other things here. Okay, we got in. Ignore the squiggly lines. I'm just using this as a default. I'm using. You can see here, like our price target for SMCI. Our first price target was $50. We got close to it, but there was some PCE news, so it might have a slight pullback. We'll see how that reacts later in the day. But overall, so good. We sold our $60 calls at 32% ROI. We still have our option leaps and our equity. So overall, solid trade. All right, now getting back to the option trading tips. Okay. Tip number 1, learn the Greeks. Do not skip on the Greeks. Okay, the Greeks are really important. You got to learn delta. You got to learn gamma. You got to learn theta and vega. Okay, this is literally the option premium model. This is the model to your option premium. When you're buying a contract, your contract is made up of these components, and it's going to tell you how fast it's going to go in profit, or how fast it's going to lose in value. Okay, and you have to understand how the mechanics behind these. Okay, you got to know that delta is the measurement of how much your option premium is going to increase for every dollar move when the stock moves your way. Gamma is going to tell you how fast delta is going to change, right? The more gamma is, the faster delta changes, the more money you make. Theta is going to tell you how fast your option premium is going to decay over time, all right? And then Vega is about how sensitive your contract is to implied volatility, right? So you have to understand these, because then you will be able to make smarter strike selection contracts and expirations. And overall, lead you to something like this, right? That's what we all want to do. We want to have a great year, a great profitable year. Okay, better, and our goal is always to beat the S&P 500. All right, so that's tip number 1. Tip number 2. All right, and I have tip number 2. Actually, I should just probably make this smaller, shouldn't I? Tip number 2. Okay, I got notes. Okay, get obsessed. Get obsessed. I think I misspelled that. All right. If you're not seeing the results that you would like, and your trades feel random, and your account balance goes up and down, and it's all sporadic, okay, it's probably because you're trading like a hobby. I get so many DMs. They're like, "Yeah, I would like to, you know, I came here to learn, and I want to, maybe turn this into a side hustle, and then maybe into a full-time trade." You don't even think. If you're thinking like that, just stop trading in general. Okay, you have to get obsessed. You can't treat option as like a side hobby. All right, it's not like you're gonna do it for a few hours in the week and then just think you're gonna get good. You got to treat it like a professional game. All right. So instead of like watching Netflix or you know just kicking it back after like during closing hours, you got to stay up late. You got to stay up late, study your trades, right? Study trades, learn math models, okay? If you think that like trading is about drawing triangles and squares, you couldn't be wrong. Okay, this is just a big X. Big X. Okay? That's not what it's about. This is a game built by mathematicians. Learn math models that give you edge. Learn how the option Greeks, learn how to use the option Greeks, and then make math models out of those. I mean, I don't think I can make it any more clear actually. You got to like study. Okay, here, look, study option flow. Analyze how who's buying and who's selling and then analyze how it's affecting price and volatility. Okay, learn risk management models. There are a lot out there. Okay, learn how to turn theta from negative to positive. Okay, you have to get obsessed. You cannot treat this as a hobby. Okay, the only reason I'm able to have this type of performance is because I'm obsessed. Day in and day out, I'm obsessed. All right, I spend hours and hours and all hours of the day learning, studying, getting other, checking out other people's mind and how they work. Okay, how are they able to do that? How do they do this? How do I do that and put it into my system? How can I make it better? Can I tweak that? And so on, right? It's constant improvement every single time. If you want to be very, very good, if you want to take this as a serious trader that works, like you want to be a professional, you got to take this seriously. You cannot treat it as a hobby. Okay, I get this a lot where folks want to just treat it as a hobby, and then they just never go anywhere with it. It's just I can already tell. Like I can already tell, like if you're gonna make it or not. Okay, I don't mean to sound pessimistic, but I've seen this long enough for me to know. Okay, okay. Number 3, get a coach. Okay, especially if you're new. If you're new. Okay? This is really important. This is how I like to think about it. All right? A lot of traders, and again, I talked to a lot of them, they want to go the free route. They want to be cheap about it and they want to go with the free route. And they want to say, I just want to do this and do it on my own and just read articles and do the courses, this and that, whatever. Okay. Let's take something very basic, like driving. Okay? Driving and trading are very similar, all right? Just think about it this way. You can study the written exam, right? To get your permit. And that's one thing, right? But when you get behind that wheel, it's a completely different experience. You don't know how the weight of a car. You don't know how the weight of a turning steering wheel, right? You don't know how to distance, speed, measure, and spatial awareness. You need somebody next to you to teach you, to guide you and navigate you on the street, on the road, right? You don't just come out knowing. And that's the exact same thing with trading. You can't just watch trading videos and then just like try and emulate that. Because when you watch trading videos, you're just looking at the final outcome. But you got to know how to navigate that in real time. It's much more difficult. It's much more confusing. It's not easy. If it was so easy, everybody would be rich, right? Everybody would know how to trade and have this type of results. But that's not the case, right? Get a coach if you need it. I've spent thousands of dollars on coaches and just renting people's mind. That's how I like to think of it. I'm renting somebody's mind. They have something that I cannot achieve or I haven't achieved yet. I want to rent your mind. Let me test drive your mind. That way I can see how you trade and how you view the market. And you learn from it. You grab the things that you learn from people and you implement it into your own system. It's the same thing with coaching, okay? With trading and driving. You got to get somebody to help you navigate you. Do not cheap out on that. I've never understood that before. Okay? A proper mentor or even a good group. If you don't even want to go through the coaching route because it's too pricey, if you find a good group, the host of that group, that the trader, whoever's trading, should give you guidance every step of the way. It's not just like, copy trades or this and that. It's like, okay, you're getting to the contract. What's the size? What's the stop? How are you thinking about uh, the profit? How are you thinking about real time trading volume? How are you thinking about the current move? Like constant updates. That way you can absorb and then emulate and then do it yourself, right? Right then and there. You can see how they're keeping their composure and how they're risk managing in real time, right? How are they thinking about turning this losing trade into a winning trade? Sometimes I bet you most traders don't even know how to flip a losing trade. Like let's say you have a call and you could actually convert it into another strategy so you can at least mitigate the losses, break even, or maybe even be profitable, right? These are all things that you need to like find in a coach or in a good community group that can help. You can shadow trade with them. All right, get a coach. Like everybody's gonna lose. If you're trying to do the cheap route, you're gonna lose. Believe me, I've seen this game long enough. All right, number 4, option trading tip number 4. Don't obsess over every winning trade, okay? Look, the option game is a probability game by nature, okay? Even the smartest brains get things wrong. Everybody has a drawdown period. Everybody's going to have a winning streak. It's about probability, okay? It's about taking as many opportunities as possible so you can have the probability of coming out profitable, all right? Focus on not on the win rate, focus on the risk to reward ratio. Okay, tip number 5, actually, let's go into that one. Focus on RVR, aka risk to reward ratio. Okay, risk versus reward. Okay, very, very important. This is a question. This is something that, again, a lot of losing traders focus on. What's the win rate? Forget the win rate. There is a much better approach. It's called risk to reward. When I ask individuals, well, what's your risk to reward? They're like, I don't know. Most of the time, everybody's risk to reward is below 1 and below 1. It's below 1. If it's not 1 to 1, not even a 50% win rate is going to save you, all right? That means you're losing. You're negative. When I ask somebody that if your risk to reward ratio is 1 to 2 or 1 to 3, you can have a less win rate, okay? You can have a less win rate and still come out profitable. So then you don't even have to worry about winning all the time. It takes a stress off of your shoulders, and then you could just focus on what's important, which is protecting your capital and maximizing your results with a good RVR. All right? Really, really simple. So that's tip number 5 that I would tell you. Okay, number 6. Now, all of this, these 3 are not. Look at me. These 2 are not possible. If it's not possible to have a low winning rate and a high risk reward if you do not keep size consistent. Okay, I've done a few videos on how to size into option trading so you could be consistent with them. Okay, this is really, really important. I used to run a trading software company, and I've seen crazy sizes. I've seen people go into one position size at $20,000, make 40 grand, and then the next trade is literally like $35,000, and then they blow it, and then they trade again with 500 bucks. Like, you have really inconsistent results. This is what your instead of your equity curve looking like this, like this, it looks like this. Like, you go like this, and then you go down and you lost everything. And then it's like trying to climb back up when the median was right here, right? Your zero was right here. Like, it's insane. Okay. If you want to have a low win rate, just for some basic math, if you have a 1 to 3 risk to reward ratio, right? You can have a 33% win rate and still come out profitable, or break even. Sorry, break even. Okay. And that's only achievable if this is consistent. That's the only key. Okay. Otherwise, this is not possible, and you're going to more than likely lose. So keep consistent. So don't obsess over winning trades. Focus on RVR and keep size consistent. Okay. All right. Tip number 7. Okay. Learn the mechanics, mechanics of a market maker. This is really important. Okay. The biggest edge you have in the market is not to draw FVGs and trend lines and this and that. It's to understand who's buying, who's selling, and how's that influencing price. Okay. And market makers have a huge influence in the price of a stock. Okay. When you buy an option contract, they're going to sell it to you. It's not somebody else in like the other side of the world. All right. It may seem like that, but it's not them. It's the market maker who's actually giving you that contract, and they have to hedge their position. Okay. So you got to learn mechanics like how do they hedge? How do they hedge? How do they adjust inventory? Okay. Because they have to, that means like, how do they hedge, and then how do they unwind their hedge? How do they readjust their hedge? All right. Those kind of things. All right. And how do they uh, handle volatility? Okay. Volatility hedge. These are all important mechanics. Okay. Because they're the ones setting the playing field. And if you know how they're setting the playing field, then you have a much better understanding of like, where is support and resistance? Where is price going to react the most? And you want to take advantage of that reaction. Okay. All right. Next thing, focus on IV. Whoops, not focus. Focus on IV. Okay. Implied volatility, by definition, is forecasting future price. That's pretty much what it means. Okay. When you're doing your charting, don't look at historical data. Don't look at what happened 2 hours ago, last week. It doesn't matter anymore. Price is always forward looking. You hear it all the time. The market is always forward looking, and that's true. And the way to know, there's one metric that can help you look forward, and that's called implied volatility. What are participants forecasting this price of a stock to be by a specific date? Okay, and that's called an expected move. Okay, learn implied volatility. Understand the distribution that it does. Like, how does that affect your option premium contract? You call it the ER run up. This is what happens with ER. I'm going to give you guys a quick look at this. Okay, this is what price typically looks like for let's say that this is value, V is for value, this is price, P is for price. If you get let's say this line is at the money, it typically looks like this, right? The deeper the strike goes in the money, the more money you make in value, right? But implied volatility has a different ball game. It actually does this. It almost flattens everything out. So you got to understand how implied volatility affects your option contract. Okay, very, very important. All right. Tip number 9 that I would give you. Tip number 9. Learn to read the tape. And not, well, you could do the equity tape, equity and option tape. Okay? Two different types of tapes, but essentially the same thing. You want to see how aggressive buyers are stepping in and how aggressive sellers are stepping in at a certain key level. Okay? When you market key levels, you want to see if buyers are coming in at that level or not, right? If it's not, then maybe it's giving you a hint like, hey, this is a weak at level. Just wait to see what happens on the next one. All right, until you start seeing that on the tape. All right. And number 10, because this video is a little bit too long now, 21 minutes, damn. All right, number 10, volume price analysis. Okay, this is the only indicator I recommend when you're trading, and it's to be able to analyze volume with key levels, option flow, and this way you can have a complete picture of what is happening. Okay, that way you are not like stuck guessing like what's going on, this or that. Like you can actually see if buyers are stepping in your support level, or if sellers are stepping in your resistance levels, and so on. All right. So again, like you don't have to master all of this overnight, okay? Because it's a lot, and I get it. So just pick like 3 to 4 things and just commit to them and apply them every single day, and you're gonna see like you're gonna get past that beginner phase, and then that way you can achieve this type of result, and it's totally possible. But these are my 10 option trading tips that I would recommend. Okay. And again, if you ever want to if you want to speed through all of this, because this is a lot, just find a group or a coach that could do that for you. It's really that simple. Do yourself a favor. You'll save a lot more money in the long run. But that's it. That's my option trading tips for you. And if you found this helpful, or if you have any questions, leave a comment down below. If you want to trade with me and my group, I'll put a link in the description as well. And I will see you on the next one. Peace.